Welcome to Orange County Power Players, where we spotlight the personal, professional, and financial success stories of OC's top leaders. Here's your host, Danny Flores.
Welcome back to OC Power Players, where I interviewed some of the most successful people in Orange County and other places as well. I'm your host, Danny Flores, and today's honored guest is Mauricio Rauld, zooming in from Florida. Mauricio is a founder of Premier Law Group, which he left in 2024 after building the firm to become one of the top and most respected syndication law firms in the country. He then founded Platinum Legal Consulting, where he coaches and consults with top syndicators to help them stay compliant and structure their offerings using Mauricio's 25 years of experience. Named as a rising star by Super Lawyers magazine, Mauricio regularly shares the stage with real estate guys like and the likes of Robert Kiyosaki, Ken McElroy, Brandon Turner, Pace Morby, Brad Sumup, and others. Welcome, Mauricio.
Thanks for having me, Danny. Looking forward to this.
Yes. So tell us a little bit about how you got started in the law firm, how you specialized in syndications.
Yeah. It's a lot. I won't tell you the whole story, man. That'll take three weeks. But the short of it is, I've been practicing, as you can tell from the white hair. I got more white hair than you do, actually.
Yeah,
I've been doing it for 25 years. But I started off at a law firm, great law firm, where I did litigation, and I did some securities litigation. So I represented sort of the Goldman Sachs, Merrill Lynch's, J.P. Morgan's of the world. American Express was another one. But I was in litigation, right? So I came in when they got sued. They get sued. I come in, I defend them. I go to court. I go to trial. I go to depositions, all that stuff, right? I knew that law firm life was not for me. Man, you got to keep track of every 6 minutes of your life. You've got to keep track. You've got to go in on the weekends. The hours are brutal. The pay is nice. Don't get me wrong. The pay was really nice. But I just knew that's not what I wanted to do long term. And I got very fortunate that back then, this is like 2005, so 20 years ago now, I came across the little purple book that I'm sure you're well aware of and your listeners are. And if they're not, they should definitely pick it up, which is Rich Dad, Poor Dad by Robert Kiyosaki. And that's more of a mindset book. And that completely changed the way, maybe not changed the way, but just kind of confirmed the feelings I was having. Like, there's got to be more to this. I'm stuck in this rat race. And so that book was really transformational. And what I got super lucky with was I literally, because of that book, got introduced to the real estate guys that you mentioned in the intro, Robert and Russ. And I went to work for them. I became their general counsel and basically ran their entire legal department. And they were just kind of peaking and doing their capital raising stuff. So that's really where I cut my teeth on real estate syndications. I was their general counsel. I was working with their then outside attorneys. But that's really where I learned the business. And remember, Danny, this is old school, man. This is 20 years ago. Imagine where you're actually there's no Zoom, right? There's no social media. Right. You are literally having in-person events, everybody crammed in, like 60 to 100 people in a room. There's a PowerPoint, and I think even then they were doing the acetate thingamajigs, and they would pitch the deal. I would be there with the PPMs printed out. I would be going through the documents. I would be accepting checks, like totally old school. So anyway, so that's kind of where I cut my teeth. I did that for a few years, started my own law firm a couple years after that, and grew it to be one of the most, I think one of the more successful boutique securities firms. We specialized in, and Premier Law Group still does specialize in Reg D, real estate syndications, built that into a multi-seven-figure business, and then last year exited. I sold it to my partner, Bethany, an amazing partner, amazing attorney. She continues to run the firm and has taken the torch and continued. I wanted to focus more on the teachings, right? I like to teach. I like to mentor folks. And so I started a consulting business, a coaching business, where I literally help real estate syndicators raise capital compliantly so that they can stay out of jail.
Wow. No, that you're going to do it. You want to do it right, correct?
Yeah.
Now, you said you help them raise capital. Do you literally help them raise money, or do you help them stay compliant?
Yeah, I help them stay. Yeah, that's a good distinction. I mean, I help them raise money compliantly. Like, I am not a licensed broker. I don't even match, even though I probably could start that service where I could match sponsors and LPs just because I know so many of them. No, I make sure that syndicators not only protect themselves, but really also protect the LP investors to make sure that all of the disclosures, all of the risks associated with a particular deal, that they're disclosed to the investors. I'm a big believer, but also the SEC is a big believer that, look, LPs are smart. They know what they're doing, but they just need to be provided all the information. So we prepare these documents called a private placement memorandum, as you know, a PPM. And I analogize the PPM to a medical consent form. I don't know if you've heard my story, but when you go to have surgery, and I've had so many, I'll give you an example. I've had so many oral surgeries. I have terrible teeth, but every time I go in and get something pulled and they put me under, they'll have me fill out a medical consent form, a little yellow sheet that says all the ways, all the risks of the procedures, right? I could develop some bleeding. I could get an infection. I could die from getting these teeth out. So I sign, doctor signs, boom, they make the procedure. It's the same thing with the offering document. The private placement memorandum is a disclosure document where the investors are just disclosed all the way the deal can go south, no matter how improbable it is. Just here's all the ways they can go south. That way the LPs go into the investment with eyes wide open. They can make an intelligent decision whether this is a good investment for them or not, but you're just making sure that they have all the material information about the deal, about you, about the loan product, about the market, all of the information. And so that's the primary way we deliver that information to LPs is through this offering document called a private placement memorandum.
So now that's really interesting. And I think that we have to keep in mind that we have to protect the investors as we do these deals. That's the main thing. And I think that's what the SEC wants to do. And as operators, we want to have good counsel that helps us protect the investors at the same time. Now, in the last 2 or 3 years, I mean, the real estate market is not always going up. And we've had some trials here in the last 2 or 3 years where everything shifted. And there's some more experienced operators that know how to shift with the market, know how to prepare prior to that storm coming in. And there's some that kind of got caught with their pants down. So what do you, as a coach or as your consultant, how do you help them maneuver through something like that?
Yeah, I mean, this is obviously something that happened way before I even started my consulting business. But back in 2021, 2022, that was really where the peak is. I think even at the firm, the peak years for us was right in the middle of 2022. That was kind of like the absolute peak. And as you know, what happened is a lot of folks, with interest rates getting too high, and we had COVID and everything. What ended up happening was that the property value started to skyrocket, but the rents weren't catching up. I mean, rents were going up, but not as fast as these. Oh my gosh, the prices of these buildings were going up so fast. So the sponsors weren't able to get the proper loans. Like they couldn't get an 80% loan on a deal because the rents didn't justify for the lender. And so they had to go into this a little bit more riskier scenario where they would get these bridge loans, which allowed them to sort of push the leverage, get back up to 80%, sometimes even 90%. But they were floating rate debt, right? They were floating. So back then when it all started, interest rates were not zero, but very, very low, 3-4%. Right. And even though sponsors, and this is something I would advise, and I do advise my clients today, is they did get insurance because there's something called a rate cap that you can get, which basically protects you that if it goes above a certain interest rate, you get an insurance policy that kicks in to make the difference. They all have the insurance policy, but nobody anticipated that rates would go up so fast and so quickly. And so they start at 4, their insurance taps out at 6, and the interest rates kept going to 6, 6.5, 7, 7.5. Some of them were at 9. Once those rates expired, you're SOL, right? And so the game plan was always to refinance out of it or maybe sell it, once you the value add. But obviously, when it was time to when those interest rates reset, they didn't have the value was lower, so they weren't able to refinance. And even today, are not able to refinance or sell without taking a loss. So that's where we are today. And unfortunately, the banks have been kind of stretching this out, kicking the can down the road. They haven't allowed the market to reset by just foreclosing on these things or just forcing sellers to sell. They've been kind of extending and pretending is what we've been saying in the market. That looks like it's about to stop, right? It looks like the banks are starting to get to the point where they're maybe not foreclosing, but they're forcing the management to get out. They're bringing in another party to basically take over the loan, take over the property. But unfortunately, those deals have lost a ton of cash. LP monies are, for all intents and purposes, gone, and a lot of them don't even know about it. But it's all because of that really the pushing of the interest rate, the pushing of the leverage, getting the debt in there, the variable rate debt, the bridged loans, and interest rates just skyrocketing. So we're still another year away, I think, from getting all of that messed up. So if you're a syndicator right now, you got to be patient, because I think you're going to see some more opportunities here in the next 12 months.
Right. Now, what do you see as far as the cycle of the market? Do you think it's the bottom of the market, or are we nearing where we're going to start maybe seeing some positive side coming out to it? I mean, looks like the rates have somewhat stabilized. I know a month ago they were still very volatile because of what's going on in the markets, but for the most part, it seems like the dust is settling. And now let's see what happens.
Yeah, I think that's a good way of saying it. The dust has settled. I don't know if we're ready to start the new cycle yet, but I do think we're kind of at the bottom area. There's still, again, a lot of loans that are still out there that are underwater and have to clear. We have to clear the market. We got to get rid of those loans. Banks need to step in. Once we clear those, then you're going to see a path forward to the next cycle. I will caution, though, that I am in the camp that unless there's some catastrophic event, which nobody wants, I don't think you should be relying on interest rates coming down anytime soon. I think they continue to the expectations of rate cuts are getting lower and lower. I don't know if they're going to even cut any rates for the rest of the year, unless, again, there's some recession or some event, some liquidity event, which is not a great environment for you to be refinancing and buying stuff anyway. So right. I would caution, but numbers are penciling out. I mean, a lot of my clients are now finally able to pencil things out. Prices have come down enough where even at 5-6% interest rates or higher, it's starting to pencil out with the current rental income. So it's getting there, but I don't think you should be anticipating cap rates compressing anytime soon and interest rates property values going up until the market clears, which looks like that's looking like 2026.
Right. That's what we think is 2026 is the start, the potential start of that. Now,
Danny, I don't know if you heard this, but there used to be this whole thing called survive till 25, and now people are saying persist until 26. Just hang in there one more year.
One more year.
Let's get a reset.
One more year. Yeah, no, it is. It's been definitely different markets, and if you're new to the cycle, you might not know how to weather the storm as well. Now, do you see volume increasing right now, where you have more people looking for more deals, looking for more?
Not on my end. Volume collapsed right at the beginning. When this is, again, middle of 2022, we saw like a 60% drop in transaction volumes, 60% drop in our practice back then. Mm-hmm. That's stabilized. Again, it hasn't come down, but the dust is still settling. We haven't seen an uptick where we're back on trend, or we were back how we were doing back in 2021, 2022. Right. So I still think there's a discrepancy between buyers and sellers. I mean, the gap is getting closer, but I still think buyers think their properties are worth a little bit more, and sellers think they're not worth as well. And there's still a mismatch in price discovery, or cap rate discovery is still a challenging thing. And until those loans get wiped off the books and we can start fresh, you're going to have that lingering effect on the market, I think.
Right. Now, there's a lot of people that look at this business and think that there's a lot of money to be made. I think maybe it's not always what it amounts to be. There's a lot of work that has to be done to be able to maneuver these projects from acquisition to the exit. And you have to have some type of experience to be able to do that. If there's somebody new that's trying to get into the business, what do you suggest they do to do it right, I guess? Because that's important.
Yeah, I mean, other than joining my coaching programs, I'll make sure you're doing it compliantly. I would say that you should spend some time finding a sponsor that does have the experience, and then just riding their coattails for the first 2 or 3 deals. There's no better way for you to learn the business than under an experienced syndicator. So find out how you can add value to a more experienced syndicator, become sort of a co-general partner, a co-sponsor in a deal. Look, you're not going to make a ton of money the first couple of deals. You might own 5% of the deal, 10% of the deal. It's not a lot, but what you're gaining is the knowledge and expertise. And maybe even you're putting your credit on there, so you're getting a little bit of experience on the lending side too, so that when you're ready, maybe in the 3rd or 4th deal, you can venture on your own and you have that experience of going through these things. Because what happened a lot, to your point, there was a lot of inexperienced syndicators, and a lot of syndicators crushed it, not based on any quality of work or any like super value add thing. It's just it happened that rates compressed and property values went through the roof, and so they could have like completely failed in the business plan and then still made a great return for their investors because of the rate cap compression. That's not happening anymore. Like, in order for you to make a profit now, you have to actually execute on the business plan, increase that net operating income, and actually do the work. You're not going to get bailed out by the market. And so that's a big difference. I think apprenticeship or finding a co-sponsor that you can help out a little bit is the best way to go.
Mm-hmm. So tell us a little bit about your program and what you offer in case if somebody is listening and is looking to get into the business, how they could potentially have you help them move along.
Yeah, I appreciate that. So I have the Elite Syndicator Legal Program, and I have one mission and one mission only, and that is to make sure that syndicators raise capital compliantly. That's the entire purpose of this. We meet once a week. It's a live coaching thing with me. It's primarily a Q&A thing. So for syndicators who are looking to ask a specific question about their specific situation, I'm available basically once a week for you to come on, ask your specific question, learn from the others who are asking questions. And then I do a little presentation. So there is a little bit of information as well. But I believe we're all drowning in information, right? It's really the implementation that is lacking. I mean, if you want to find out, the difference between a 506B and a 506C, knock yourself out. You can go on the internet, you can go on YouTube, you can figure it out. But then applying your specific situation on, hey, can I do this? Can I do that? Is this social media post allowed? Is this website allowed? All those landmines that people step on prior to hiring an attorney, that's what I'm there to fill and help them out and making sure that they raise capital compliantly.
Okay, so you heard it here. Now, what's the best way to get a hold of you, Mauricio?
AskMauricio.com is probably the quickest way to do it. Just that'll get you a little thing. You can fill out the information, and that'll get it'll translate into an email directly to me. So just AskMauricio.com. Okay,
very good, Mauricio. Well, thanks for coming on the show and sharing your knowledge and insights. And you heard it here. Get a hold of Mauricio, and he can help you along, keep you out of trouble, and teach you a whole lot of good ways to raise money. And to our guest, please go to ocpowerplayers.com and follow us on your favorite channel. Thanks, Mauricio.
Thanks for having me.
Thanks for listening to Orange County Power Players. Want to share your success story? Apply to be a guest at ocpowerplayers.com/guest.